I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a fantastic show. Our guest today, David Scranton, he's going to be back with us today. He's CEO and founder of Sound Income Strategies. We're going to be talking about how the Dow took that huge tumble last week, and the Fed, they're indicating that they're going to be staying on course, raising those rates. So we're going to see and talk to him about what's going on there and what it means to you. Plus, cannabis plays still on our list here today. We're going to be talking about that. Gambling stocks make their way back. It's time for an update, so we're going to be talking about gambling stocks in addition to the cannabis. So guests, stocks, and a whole lot more. Stay tuned. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation. Delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned in to Traders Nation. Thanks for staying with us. Hey, Don, so far so good. Right?
That's right.
Yeah. Hey, Don, top of our list here today, cannabis stocks. Certainly want to talk about that. MJ, Mary Joseph. Mary Joseph.
Mary Joseph.
Done. Hit a couple of those. You may see Mary Joseph. ETF Managers Trust is the name of this one. MJ. Mary Joseph is the phonics for that one. I just made that up. Currently trading at $40.17 here today, Don. 403,000 shares exchanging hands. Okay. Here today, up $3 since we spoke about it last, which is not a big surprise, quite honestly. There's a lot of volatility in the cannabis plays right now. They're down, they're up, and here we are. We're on the upside talking about it now. It's hanging out here and trading sideways at these particular levels, trading right above its 21-day moving average, well above its 50-day moving average. Don, your thoughts on MJ?
Well, MJ is the basket of stocks for those that don't follow the individuals. It's an ETF. And it's trading at around $40 in here.
Sure.
Once again, it's a basket of the marijuana stocks.
Yes.
And there it is. It's up $3 since we brought it to the listener and viewer's attention. And of course, yesterday was day one of pot smoking in Canada. It is now legal.
Yeah.
in Canada.
It sure is recreational use, Don. Did you see? I saw on the news, Don. Listen, I saw on the news this huge line coming out of this cannabis store in Canada, down the street, around the corner, and probably even around that corner too, Don. What a wonderful business to be in right now in Canada. I mean, Don, can you imagine? I mean, these guys, these cannabis stores, they can probably charge whatever they want. And if you don't want to pay it, there's a guy behind them that will pay it, Don. What a wonderful problem that they had yesterday on opening day and Cannabis Day in Canada, Don.
Well, to say the least, it is a great business, and it is a wonderful business to be in. Sure. And congrats go out to those that have been finagling around and getting into the business over the past number of years. But once again, and here we go, it's legal in Canada.
Boom.
Legal in some states down here in the U.S. Illegal, by the way, to bring it across Canada. For those listeners out there that are going to want to run up to Canada and buy their baskets of pot and bring it across the border is still illegal.
Yeah.
And we were talking pre-show, and we're going to talk about Cronus Corp and Canopy, but Canopy Growth is one of these stocks. Interesting little tidbit.
Sure.
The Canopy Growth Company their market value now is around $10 billion. That's their market capitalization. Yeah. And that makes them, from a market capitalization standpoint, larger than Bombardier, which is one of the large manufacturing of rail cars and aircraft up there in Canada.
Yeah.
So some of these stocks, have they gotten ahead of themselves?
Yeah.
Maybe. But it is a growing, rapid business. Yeah. That is for sure.
Without a doubt. Bombardier can be compared to what, like Boeing down here in the States, for those that wouldn't know? Okay, yeah. Huge.
Yeah.
That's this business, huge market cap, big business, and certainly a growth business. Not only today, but tomorrow we're going to be seeing that. And we're going to be covering these cannabis stocks. And supporting companies also, too, Don. You've got packaging, you got transportation, you've got all these other supporting companies that are coming into this, Don. So let's talk about Canopy Growth here today. CGC, Canopy Growth Corp., currently trading at $51.20. 5.9 million shares exchanging hands here today. Don, your thoughts on that?
Well, that's a stock that was trading at $11 last November, so what can I say?
Yeah.
For those that have ridden it up, congratulations. You got to keep an eye on it, but this is one of the leading Canadian marijuana stocks, CGC. We've been covering it here right from the get-go, trading up, it's down today. The markets are down substantially today, over $300 to the downside right now.
Okay.
So, some of these Canadian stocks are holding up well, and they were down yesterday and the day before. So once again, we got into the buy the rumor and sell the news.
Sure.
But overall, they're holding up reasonably well, and Canopy Growth is one we'll be keeping our eye on.
This particular stock here, folks, I love the chart on this. Bring the charts up on this. Up $3 since we spoke about last. Again, not a big surprise there. It recovered nicely above the bottom of its channel. So it dropped below the bottom of its channel. It has now reversed up above that support level, because that's a support level, critical support level for these channel plays. But this is probably one of the best looking charts that I have on our list for cannabis stocks. I like the chart on CGC. It trades in this beautiful channel. If you bring it up on your chart, you'll see exactly what I'm talking about here today. It's hovering above its 21 moving day average, and it did find support. Like we said, if it's going to drop at or below, it's got to have that support at $48.30. It found it there, and now it's trading above that. Back up. CGC should be without a doubt on your list, and that's Charlie Golf Charlie is the phonics for Canopy Growth Corp. Hey, Don, let's move on to Cronus. CRON is in Nancy. Charlie, Robert, Oscar, Nancy. Cronus Group, $10.96, 2.5 million shares exchanging hands here today. Volume on this one average is 10.2 million. By the way, that volume today on cannabis stocks are like double what we're seeing on the previous session on Traders Nation. So, like, for instance, Canopy, 5.9 million shares exchanging hands at this time during the trading session. Previously, when we spoke about it, it was like 2.1 or whatever. So heavy volume on these cannabis stocks here today that I noticed. Cronus, up $2 since we spoke about it last. It did find support at that $9.35 range. Trading right at its 21-day moving average, slightly above the 50-day moving average. Don?
Well, on Cronus, this is Cron, C-R-O-N, the symbol. These are the money guys. This is an investment company that invests in various cannabis stocks, and it's up $2 since we started talking about it. What can I say?
Yeah.
So we've given them the MJ, we've given them the ETF, and now we've given them two growth stocks.
Sure.
And if you want to move on and talk about Aromas, there it is.
Yeah. All right.
That's next.
Yeah,
Aurora Cannabis.
Yeah, Aurora, ACBFF. The fifth letter indicates a foreign stock, probably Canada. We talked about that. Currently trading at $10.70, Don. 5 million shares exchanging hands here today. It broke through that resistance. Bring your charts up on this. Remember, we kept talking about that resistance at $10. It hit it, it kissed it, it hit it, it kissed it, it hit it. Finally, it broke through. It got above that, and now trading above that at $10.70. Don?
I don't have the press release right in front of me, but this is a company that's also making arrangements to trade, I believe, on the New York Stock Exchange. I'm going to check that, but this is a lower price stock now. And once again, as you pointed out, the ACBFF stands for foreign issuance.
Yeah, that fifth letter. Now, the fifth letter, there's Q's, there's F's, whatever. You can always Google this or whatever, fifth letter indicator. It will give you a whole list of what that fifth letter indicate, what it means and what it's designated for. F means it's foreign, which it's an outside company, maybe Canada, trading on the American exchange here today. Okay. Don, gaming. Let's go on to gaming. We haven't talked about gaming in so long. Gaming has taken such a beating, and certainly it behooves us to come back and talk about that win way down. WYNN currently trading at $115.82. But even though it's way down from when we spoke about it at its highs at $200, Don, it looks like it's starting to settle down. Some of the volatility has come out of Wynn. It's biased to the downside, but some of that volatility has been shed from it, all right? 346,000 shares exchanging hands here today. Don, your thoughts on gambling?
Well, on Wynn, obviously Steve Wynn is long gone now, and it seems that they've got the board squared away now.
Yeah.
They've got the Massachusetts operation open, and that's getting up and running. But, of course, this is one of the largest revenue producers in Macau, which is has been a spectacular gaming haven for the Chinese.
On the other side, so we got David Scranton coming up next. On the other side, we're going to come back and shotgun out some of this gambling stuff. David Scranton's up next. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning. Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again David Scranton. He's CEO and founder of Sound Income Strategies. David, welcome back to Traders Nation. How are you today?
I'm doing great. Thanks for having me back.
Yeah, certainly, absolutely. Hey, David, Fed indicated that staying on course in regards to rate hikes despite growing criticism, probably mostly from the administration. What's the story on this?
Well, I think what they're trying to do is they're trying to, and they are actually finally starting to successfully send a message to the bond market because they've realized for a while that they can't keep raising federal funds rates without long-term interest rates cooperating and increasing accordingly.
Yeah.
And up till recently, every time they increase the federal funds rates by a quarter point, the long-term rates go up by a tenth or maybe 15/100ths, and that's not enough. So I think here what they've done successfully is send the message to the bond market that, hey, we're doing this. So all of a sudden the yield on the 10-year Treasury went up about 0.3% in a matter of a couple weeks.
Sure.
Now, whether they do it or not, I don't know. In fact, I think we might get one more, not two, by the end of the year.
Yeah.
But at least they've got some cooperation from the bond market.
Right, exactly. And back again to this administration, certainly they feel that these rate hikes are going to hurt the economy. Nobody wants anything to get in the way of the economy, but the Feds, they got to walk this fine line, don't they, when it comes to raising rates? And that other fine line is are they going to get in the way of everything that is good for the man on the street?
Well, and the Fed has a reputation for doing that, to be quite fair. You know, in a financial crisis, they have a reputation of acting too slowly.
Yeah.
Although I have to say Bernanke really didn't do that during the financial crisis. He reacted swiftly. But then they tend to react too swiftly in general, whereas they might be too slowly when things are going poorly. They react too quickly when things are recovering, and they tend to snuff off a recovery. In fact, they've I feel have been the cause of more recessions than perhaps anything else.
Yeah.
So I think that's the president's concern, and he wants to leave a legacy. His big point is, look, I might, not do a lot for equal rights and other social things, but guess what? I'm going to fix this economy.
Okay.
And he's trying to make sure that happens.
Yeah. So with that fine line that the feds have, I mean, isn't a strong economy, isn't that where they want to raise those rates and do it so gingerly or gently, as so not to affect the economy? Because the reason that if the economy really is running on all cylinders, right, it can absorb any type of Fed rate hike, would you say?
If it is, yes. And it's running on all cylinders compared to perhaps the last 10 years.
Yeah.
But otherwise, really not. You know, we saw second quarter GDP finally at 4%, but will that be sustained through third and fourth quarter? And many think not. Mm-hmm. So the jury is still out whether it's really running on all cylinders or it just looks good compared to what we've seen for the last decade.
Sure.
And I think that's the concern, is I think we need more evidence. And inflation's one good example that seems to be indicating that it's not going so great because we really haven't had the type of inflation that usually is required to justify a rapid increase in short-term rates.
Mm-hmm. The Fed's, certainly inflation is a concern for them. How do you propose that they're going to battle that, David?
I don't know. 3 years ago, it was almost 3 years ago when Janet Yellen first announced they're going to make their first raise in interest rates. And I was on CNBC that day, and I remember saying that there's going to have several problems. One problem is long-term interest rates won't cooperate, and they've been stubborn over the last 3 years. But the second point was that if she couldn't manufacture inflation with zero interest rates, how do you manufacture inflation with a higher interest rate? And that's what they're up against. So the solution, really, the only solution is really just increased spending. So the tax cuts is part of it. The other solution is increased government spending. Mm-hmm. But those are the only tools that are really left at that point if you're raising interest rates.
Yeah. All right. So what does this all mean to the average investor? I don't want to talk about I'm talking about the traders, active traders, but the average investor on the street, somebody that works 40, 50, 60 hours a week rather, and then what does this all mean to them? Should the average investor be concerned about the minutia of the Fed rates, of all these things? Your thoughts?
Yes, I don't think that anything the Fed should do should change an investor's short-term policy.
Yeah.
But what it means they do need to do is sit up straight and pay closer attention, understanding that if this does start to snuff off the economy, the growth quicker, then it could cause the next bear market in the stock market. So at bare minimum, they need to have one finger on the trigger with their stock market exposure. Now, everyone has a range. Let's say your range is at somebody's point in life should be between 40 and 55% in the market.
Right.
Well, you got to be ready to pare down that extra 15% of fat pretty much at the drop of a hat. Should this start to happen. So to me, that's what it really has to do with is people just being a little bit more alert.
So staying closer to their portfolio. I mean, let's face it, during the crash, a lot of people got stung. And I would imagine these days that people are probably a little bit closer to their portfolio than they were back then. Because, the mind frame back then, and this was on for decades and decades, you put into it, you forget about it, and you just keep putting into it, and cost averaging brings this wonderful path to you. Well, I don't think people are really in that mind frame. They may be a little bit, but they're stung by the last great recession that we had, and the loss in their portfolios. Do you think people are paying a closer attention to them today than they were then? And will they be able to move and act like you're saying?
So there's two groups. One is those that you're describing. Yes, they're paying closer attention. And if they really are, then they're not going to write it down 50 or 60%. They've already been there, done that. They're not doing it again.
Sure.
But the other group, in some ways I'm a little more concerned about, is the group that has become overly complacent because they have a false sense of confidence. Their advisor has one finger on the trigger.
Okay.
And, the reality is that in most cases, advisors simply aren't going to do that. They're not going to watch it that closely. They follow the old tenet of, about buy and hold. You can't time the market. It's not about timing the market. It's about time in the market, and all those sayings that we've heard over again.
Yeah.
So to me, it's that second group that I'd have more concern about, because at the end of the day, nobody cares more about your money than you. And even if you have an advisor, you still need to keep an eye on the markets.
Yeah, is there a short list or even a list at all that people should be paying attention to? Maybe readings, maybe a set of tools that they can go to better prepare themselves if the bear market does come into play?
You know, no. I mean, I think what it really comes down to is looking at the amount they have in the stock market, and saying, am I at the higher end or lower end of where I should be, and just following the financial news and following the markets. I mean, literally 30 minutes a day. You know, some people get up in the morning, they do 30 minutes of cardio, and they watch CNBC. Other people have, let's say, the Bloomberg app on their smartphone, and they watch the news. It pops up. 15 to 30 minutes a day, that's it. And it'll give you a good sense of what's going on.
Right. Nice. Good to hear. All right. So one last thought here today on the horizon. Where do you think the Feds want the rates to ultimately sit? Is there a target that they're wanting to get to on the point side?
Well, the target, I believe, is 3%.
Okay.
So they've got another 75 to 100 basis points to go. And I think now they're trying to rush it a little bit, or at least saying that with a poker face, trying to, again, get long-term rates to come up. And if they do, then maybe they can raise it quicker. But we'll have to see. But that's the goal.
All right. David, where can we find you today? Is there a website, or what's your information?
Well, our company website is soundincomestrategies.com.
Okay.
Or they can go to my book website. My book website is returnonprinciple.com. And yes, principle ends in PLE. I'm not a bad speller. We did that on purpose. Returnonprinciple.com.
Awesome. We'll be right back. Stay tuned. Welcome back. You are tuned in to Traders Nation. Thanks for staying with us. Real quick, Don, I want to let everyone know about Pro Online Trader DVD. Head on over to tradersnation.com today. If you're watching and listening and you don't understand support and resistance, candlestick charts, patterns, signals, if it's Greek to you, man, get a copy of this. TradersNation.com, click on that More button, and we'll ship it out to you priority. Plus, head on over to David Scranton's site. We appreciate his time here today. Okay, if you missed the website, go ahead and play the rebroadcast. All right, he's got a great book out there, too. Pick up a copy of that. Hey, Don, we were talking about, by the way, the market's back up since our interview segment with David Scranton. Back up, what, 100-something points, Don?
Yes.
Yeah, okay.
Yeah, while we were doing the interview, the market came back 100 points. So, like you said, we're still down about 260.
Yeah, we are. All right, so, and you know, that's how it goes. Gaming, we were talking about gaming, MGM. We were talking about Win and Penn.
Win, yes.
Yeah. Final thoughts on this, because we're almost out of time. We got seconds left on gaming. What are you thinking, Don?
Well, on gaming, Macau got a bad rap, but the Macau numbers are coming in. They look pretty good. And as a matter of fact, we had a new IPO today, a company called Studio City, another Macau-based company.
Okay.
MSC on New York, NSC.
Is M as in Mary or N as in Nancy?
N as in Mary.
Okay, MSC. All right, we're out of time.
We'll be covering it. We'll get it on the list.
That's right. Don, do you own anything we talked about here today?
No.
Yeah, I don't either. And any stocks we talk about, they're not buy or sell recommendations. We'll see you on the next edition of Traders Nation.